Good afternoon, everyone. BC Richfield here, coming to you live from a very sunny London. How are we all doing today? Markets are ripping. Equity markets melting faces. Trump and China looking like agreeing a trade deal, or have agreed a trade deal, depending on what news that you have seen. Things are looking really good. So it's a real pleasure to be here with you. Just got back from a magnificent few trips, Dubai, and then out to spend just a couple of days with some family out in Italy along Lake Como, which was just an absolute delight. So if there's any of you wonderful watchers and listeners out there that were out in that part of the world, enjoy it. It is a magical place. I have some wonderful family over there. Spent some time really kind of refreshed and just feeling absolutely amped for this market right now. Craigie boy, how are we doing? Fahim, good to have you with us, my friend. Thought I was having a day off. No, none of those in this game, mate. Even in Italy, there was a little bit of work going down, but my God, does it pay off, right? I mean, I don't know what to tell you. I don't really want this to be one of those shows that we sit there and gloat, but I could show you about 15 or 20 charts right now just of my stuff that has just been absolutely going off, let alone what the team have been sharing with members, right? It's going to be an absolutely insane month, coming off one of our best ever months last month, which was actually in slightly trickier conditions, but the team had a win rate well over 70%, and the risk to reward was absolutely astronomical. For example, if you had $1,000 in that account with zero leverage, you would have walked away $648 richer. So imagine that. Obviously, look, it is what it is. We can't sit there and dwell on the past. So what we're going to do is look to the future, and we really want to look at these markets right now because they are setting up extraordinarily nicely. Okay, so I want to start with Bitcoin. We're going to dive into that, and then we're just going to rip through charts. There's going to be no real education focus today, guys. I am going to give you a few pointers as to what things are. For example, you guys really should know this, and if you don't, it's not a criticism of you, but just make sure you're leveling up your education. These are key liquidity points here for me. Why are they key? Well, you want to see how price engages with these key levels, highs and lows. That's really how we establish our support and resistance areas. They're not just magic lines on the chart. This represents where the buying and selling is being done in the market. So, for example, if this was a key area where price sold off, when we come back to this area here, it becomes a good liquidity target. Why was this particular area selected and not these highs? Quite simply, when you want to look across to the left here, just even if you're looking at this in some form of recency, you can see quite clearly, that when price kind of got above this level here, we saw a little deviation. Price kind of really tried to hold this and then lost this level, key resistance all the way through here. So when we come back to this area, we have two ways to plan for this, right? We kind of go down into here. All we want to see is we got this really nice expansion above, and then we look for pullbacks. Just trading this, really, even in these market conditions, you can trade these level to level. As Ozzy's saying here at the moment, just feels like you can throw a dartboard now with a load of crypto assets on it and really kind of come away. Kind of, they're the typical bull market conditions that we're used to for sure, and everything's ripping. But I do think that at the moment we need to be a little bit cautious, and I'm going to explain why. We're going to just move a little bit further out here because I also want to show you why these levels make sense. This was a weekly level. This is a weekly level. This is still a really key level here for Bitcoin as well, which here on OKX is 108.416. Because that is the high that's still capping the market. This was the swing failure that led to the sell-off. All right, so the key liquidity is resting above 109,998.9. I think there was probably an attempt to get that to 109.999 or probably 110 flat, but it fell just marginally short. So, I mean, what are we looking at? What's really important? Why have we been long? Why have we had this bias? As we just really want to zoom. We're either looking at this market in terms of where the buyers and the sellers are. All right, if we rip this data all the way back to over here, for example, you can see key resistance coming in from these highs. Again, once again, this was the swing failure. Yeah, this high was the swing failure that sent the market down. Price managed to establish itself above it. So looking at the same principles over here, this was the area I really wanted to see price retest. We're in a very fundamental, very news-driven market at the moment. Not saying that's not making an excuse for why we didn't come down here, because we can see by this red line, when we failed to close below this here, we reacted at this bullish gap. Price came back above, setting this order block, right? And yes, you are into this move late, but the amount of people that were just like, yeah, this whole move up, yeah, fine. But look, we got confirmation on this market wanting to reach higher. We know from here, we can trade it from here. We see the displacement and we see the strong close above this area here. And then, you know, we've got a lot of confidence that price is heading for all-time highs. But we still need to break this down into a tradable system. All right, Burnside, how you doing, my friend? Mystic Way, great name, and love the logo as well, very much. I have a keen interest in the universe myself, find it fascinating, almost as fascinating as I find wildlife and especially marine life on this planet. So where are we? Daily, we've just been following the order blocks up, right? What we do is we look for key areas of support and resistance to long, to, or to short, and then we're just looking for these gaps here, right? You're looking for gaps in the market showing expansion. What happens? Why are gaps created? Well, the gaps are created because there's a failure in order pairing, really, meaning that the orders are flooding in, as you would get with slippage, for example, on your long positions or your shorts. So we look for these gaps for the to allow market participants to get back involved. Yeah, massive expansion. What happens? People ape in here. Typically, you get these pullbacks, and then the market expands further. We then have this scenario here. We're respecting the bearish candles, which are as soon as we're closing above it, as we did with this candle here. It was a little smidge of a close, right? But a close nonetheless. And for anybody that wants to go back on it, if you look at the live stream from last week, right? If you look at that on here on Wednesday, price closed above this just a smidge. And as I said, look, it's a doji candle. And a lot of people looking at this thinking, right, indecision, market's expanding higher, things are going to move lower. What you really want to understand with doji candles is that, when you're in, when the market's trending, you're looking for these to kind of form the corrective moves. So really what I want to see here, if I wanted to see a move lower, back down to this gap and potentially lower here, then I want to see displacement of market structure shift as a minimum. So go away if you're ever interested in that, or you're sick and tired of hearing people talking about market structure and you don't understand why people are flipping bias from long to short, short to long, etc. Then often what you're doing is you're looking for these expansive moves, right? So let's find a few examples here. As the market comes down into this place here, you see these inversion gaps starting to take place, right? And this is just picking the chart around. In fact, let's just go completely random. Find the next point. So here, what happened here? Market's in an uptrend. This is where we get the displacement lower, right? This is where we see the gapping lower. What you really want to see for some secret sauce in this is start to see some inversions as well, right? Meaning that this was a bullish gap, offered support here, price closes through this, violating it, making it a gap inversion. That then with the close of this candle gives us a bearish gap, means that we can trade this lower. Then the reverse of that is here when we see this bearish gap inverted, leaving in its wake a bullish gap. Just do these in green so they stand out. And then we move into the staircase pattern where we're basically just looking for, in this case, to be bullish, the down close candles or the bearish candles. to be closed above. So we can see that happened here, right? Then as we start to move up the chart, we're just saying, are these down close candles being respected? When they close above, price is looking to move higher. And we just do this till it breaks, all right? So look, no displacement to the downside here, meaning there's no gapping, there's no structure shift or structure break. So we stay in line, forget about this box for now. You see you move into this kind of state of choppiness. How do you know if price is, excuse me, how do you know if price is trending or ranging? Well, what you want to look for here, like I said, is when the down close candles close above, these set our order blocks. This is price pushing higher. Ultimately, we look for this to be respected. When you start to see failure swings, yeah, so basically here, look, what we're setting higher lows, higher highs, higher lows, higher highs, higher high, yeah, higher low, lower high, higher low. We start to leave failure swings, meaning that we're not coming down for liquidity on either side of the market, meaning that the chances that price is moving into a ranging market. We saw that here, you know, for a really long time. We were talking about obviously beginning of, well, early kind of Q1, end of Q1 2024, all the way by people just kind of getting chopped up, thrown around. Ultimately, when you start to see the displacement from range lows, yeah, so range lows around here, however you want to draw your range lows, right? Whether you want to take them from the extremes for the highs down to the extremes for the lows, yeah. Ultimately, you want price to be engaging key liquidity, all the liquidity down here. Look at the downside wicks. Look at where we see the absorption coming in. When these things get run and people are caught offside, that's when the market starts to ping pong between these levels. But we can still look for our displacement, all right? That's these gaps. If you want to know more about it, you can come and get access to my course, the Teams course, get access to our trading calls, all the education, etc. over at the Bird Nest. You can find that down in the description. If that's a little bit beyond you, then we do release as much as we can free on YouTube, Twitter, etc. But also go and take, we've got some amazing resources that teach you about all of this stuff in great detail. Let me just show you, because look, it's free. So just you really just want to come over and make the most of these things, right, while they're available. Let me just show you very quickly. All of this is free. You don't have to pay for a damn thing, right? All these infographics teach you about everything that you need to know, from candle formations, which is so very important, understanding when the market's pausing, when it's breathing, when it's looking to go, where are those key signals. Combine that with support, resistance, and something like divergences, and you have almost everything you need in a trending market. Believe me, I know, because I made my career based on very simple swing systems like that. Although I'm known as an intraday trader now, you know, I made my career in the early years swing trading, and I can tell you right now that simplicity is best. The key thing is to understand your data and the timeline that you're trading on. But there's literally hundreds of these, all free for you. What else is there? You can get access to the newsletter, which is free, all right? You can get access to the breadth charts, all right? This is actually really helpful, because this shows you the percentage of coins above the 200 period simple moving average, the 50 period, and the 20. Obviously, what you want to see is this on an incline, as we can see here, because the 200 period moving average is obviously the longest, takes into account the most data, showing market strength in multiple assets as this starts to climb. We want to see consistent levels here in the 50, and we can see that. Look, you can see the rapid increase here, and obviously you get more noise here on the 20, but you can see how we're sustaining these rips for longer. Above all of that, we got access to the economic calendar, which I'll cover with you guys in a minute, which is super important. Look, May 13th, core CPI, massive for the US, you know, could be a real unbelievable catalyst and fuel to be lit under the market at the moment, with equities markets ripping off the back of the Trump and China news, or well, USA and China news really, but you can't really deny that it's really Trump that catches the headlines, okay? Then as you see, you kind of move through these periods here, and you can get an eye on all of the key economic data. As well as that, the crypto heat map is one of my absolute favorites. Look, you really don't need to be a genius here to kind of go, okay, everything's looking pretty, right? Look at all the green. Overlay that with the stock heat map, yeah? And ideally, you want to line this up with the NASDAQ. And all of a sudden, you can see that this is a little bit more muted here, which means that there's some key drivers to this market. When we look at these things here, we can see things like Tesla holding the index up aggressively, because as we switch across, which we're going to do now, and we're going to take a very quick look over here at the S&P 500. Right, and actually we're going to take a look at the NASDAQ. You can just see what a tear this thing is on. This is the index holding the most technology stocks, right? This is what we use to really kind of draw in on the correlation between Bitcoin or cryptocurrency in general. If you want to check these things out and the correlation and whether it is in or not, you can just go to your trading view chart, go to the top up here, click the little plus sign. And what I'm going to do is I'm going to add Bitcoin here. You see this just on the all-time history index on a new price scale, yeah, which means that it's just going to join with this. And then you can just see how correlated they are. Hopefully you guys can see that. I just hate the thick lines, just they look so play school. You can see, look, these are moving pretty much correlated, right? When you're seeing moves up here, you're seeing moves up with Bitcoin because both trade as risk assets. People need to remember, people talk about Bitcoin as being digital gold, but it's not that. It's not that yet. It's a risk asset and a beta risk asset at that, right? So this is what we want to watch here. If we want to overlay other symbols, like for example, the volatility index, the VIX, has been a really good proxy of this as well from a counter perspective. Yeah, we can see quite clearly here the counter correlation, right? So what you want to see here is you want to see, and let's just look at the recency on this, right? Just so you can see it clearer. And let me move this to a line chart very quickly. So this is NASDAQ, this is Bitcoin, this is the volatility index. As the volatility index is dropping off, we see this beautiful increase in risk assets, right? NASDAQ really leading the way and Bitcoin up very close behind it. These correlations do not exist in a continuity. So it's very, very important to understand the market drivers, okay? And also, you know, the narratives behind it. But just to give you an example of a few, let me just have a very quick look at some of the questions, guys. Sorry, because I've missed a few of those here. Aussie here, yeah, it's a told you so indeed. Grandmaster Pikachu, how you doing, my friend Sui? And deep on your radar, are they? Let's take a little look. David Amber 99, yeah, what an absolute legend. Genuinely, I just think one of the best human beings to ever grace this planet. If we had, you know, a ton more of him and less of the fucktards that we actually have, especially the ones in charge, you know, the sky would be the limit. We'd probably be exploring the far corners of the universe right now rather than, you know, dicks in our hands trying to eradicate the middle class. Mystic Way, thank you. Thank you, my friend. Joyless Hugger Bear, hello, mate. ETH finally moved up. I'm less poor now, hoping this will make a reversal for a while. Yeah, I think this is looking really good here, mate. I would always encourage people to not get too kind of carried away. We are going to cover ETH shortly. You know, make sure you're booking profits. Don't hold for those 100x God trades and stuff like that. Still think that there's probably, you know, not sure if equities have bottomed here. I think probably the China news means that they have now. But we are going to take a little look at that very quickly. Yeah, looking at the swing failure situation. Yeah, we're definitely going to take a look at that in a minute, Anthony, as well. The DXY, Craig, is... let's just jump onto that very quickly, right? Because it's a really, really good point. So DXY is a very difficult one here from a correlation or counter correlation. Well, correlation and counter correlation, kind of the same thing. But from this perspective, this is a range that I've had for, I mean, I don't know, forever, right? Since I really kind of started trading and especially traditional market work. Obviously, I came into crypto afterwards, thanks to the wonderful Crypto Burb who, you know, brought me over to the Burbness crew. But this for me is really a thing of interest, just really looking how price respects these levels. It looks a little bit, you know, across here, you can see it a little bit cleaner, but ultimately just range plays on this. The problem that we've got with the correlation with the DXY, and we can see that here if we overlay Bitcoin. So for those of you that don't know, we would be looking at the DXY being a counter correlated asset to risk markets, meaning that typically, or not typically, but the correlation exists where if the dollar is very strong and the dollar index, the DXY, is just a basket of currencies that's weighted against the dollar, a slightly heavier weighted, I still believe it is anyway, towards the euro. Now, the thing with that is normally if you're seeing the DXY pump, yeah, so remember this is the DXY here, this is Bitcoin. In fact, let's do this in blue and I'll keep it extra fat for you guys on the chart, right? Bitcoin blue. So what we can see here is the dollar actually, you know, Bitcoin actually going up here with the dollar. Now, historically, it goes into these points of correlation and counter correlation, right? That actually, when you see like this here, right, you see these big moves up, actually mean that you see these pullbacks in risk assets. And you can see how this kind of goes in and out. Look at this, for example, dollar index showing some strength here and Bitcoin really selling off. Now, again, these correlations are all a bit intrepid. So what we want to do is take it as part of an overall system that we plug into more data. The issue we've got at the moment is the factors that are driving the dollar are different to what they have been before. We've got, the US are actively driving the dollar, how have been actively driving the dollar down, as we've seen through all of these moves here, up off of the highs. This is actually good for the US. Too strong a dollar actually makes it very, very difficult for the US markets, right? So markets down, bond markets down, the US needs to do some refinancing. So this all makes sense. But ultimately, we can't ignore the strength that's coming back into this because US economy is looking decent, inflation's getting under control. Obviously, we've had the rate pause, which was priced in by the market up to 99%, which is absolutely fine, but there's not really been that hawkish tone coming from the Fed, meaning that, lists are all there for risk markets to pump at the moment. And that's why we're just going to move ourselves back to the NASDAQ here. Now, we've got clean charts here that we're going to look at to kind of trade these up. If we want to look at any other assets, we are going to look at our crypto index charts because that's got our, that's got all of the data that we've been doing over the weeks and months. So we can see, hold ourselves accountable. Nothing gets changed on those charts. You can see them all in the live videos that are, libraryed on YouTube. So what else we got? Hey, Knit, you beauty. How are we doing? Yeah, so Aussie, is that why trading on the weekend is so risky? Yeah, for stock. Yeah, I mean, trading on the weekend is risky because the liquidity is really low, right? Volume, volatility is low on the weekend. Traditional markets are closed, especially now we have ETFs in the markets. Funds have more exposure to cryptocurrency. The more and more correlated it becomes with risk markets. So that's why I typically don't trade at the weekends. Yeah, you can miss an absolute belting move on crypto. Of course you can. But typically, when the big players are back in the market, they want to get price back down to a level that they want to be involved. So anyway, here we are on the NASDAQ. We gapped up for the start of the week and seen this really massive pump. That's because, trading opened late last night. The markets have absolutely ripped off the back of the China and USA news that, Trump has announced that the tariffs will be dropped, I believe, to around about 30% on China. Or 40%, and then we've got China have said 10% on the US. Pretty sure this was maybe the plan all along. Probably sat down, with Xi Jinping in the nice little comfy room somewhere and said, right, let's fuck with everyone for the purpose of getting the markets where we want it, and then let's look at this mad expansion. MRCHR. All right, John, I will take your word for that. We'll take a look at that for sure. So without further ado, risk markets looking good. Bond markets are pretty flat. They're where we want them to be. The volatility index is down and we're coming back below that magical 20 level as well, which we really like to see. And crypto's doing really well. Now, somebody did ask about Sui. I think it was Grandmaster Pikachu, who's always a big Sui fan. So let's look. Where's our index chart for Sui? There you go. You gotta love it when you go on these charts and you see some stuff working out, which is why for me it's just so very important to kind of keep these charts, do the same ones every week. That's why, although we partner, or I will partner with different exchanges, that's the nature of the game. We're professionals in what we do. Football teams get sponsored by all kinds of shit, so we get sponsored by exchanges. I don't sit here and shill you and tell you to use them all and stuff like that, but I work with the best ones for the assets that I'm trading. But I like being quite neutral with some of these a lot of the time, but henceforth why we do them on the crypto index chart. So sexy magnet drew price up all the way from the bottom, but look, we're just looking at the levels, guys, right? Just understand where these key levels are coming in. Zoom out to the weekly, right? Find the key areas of support and resistance. Why are these key? Well, that was a prior all-time high. What do we see? A little bit of resistance here, deviation. Price got underneath, sold off. Look what happens when we close above. Owned this level, price moved up. You're closing above these levels, monitor how the support and resistance looks, right? Then move down to a daily and say to yourself, all right, where are those key levels on the daily? Just look across the line and say, okay, where are the downside wicks where price was really trying to get back up? And when we lost these levels, where did this offer key resistance, right? That's what you'll see with these kind of grey blue boxes as well. So there's nothing particularly special about this. This was an area of interest here because this box kind of extends across this area. typically support and resistance aren't just lines. You're looking for these wicks. Where's the absorption, right? So, you know, if I move, let's have a look actually if I hide these for a minute. Yeah, I know it's going to pop back in a second when we look at it. But if I get this, right, and let's look at these in here, right? So where are the key kind of wicks we can see on the chart here? Yeah, and that's a shame. I don't think that's going to work across there. Is that my magic little pen tool? Sadly. Okay, we'll flick off of that. And let's just kind of keep this in here. Right, so as we can see here, look at the downside wicks in this kind of area. Yeah, so when I'm looking for these expansions, I'm looking for the levels that caused them, right? So for the drawdowns or the pullbacks here that led to the pumps. Ultimately, that's why this was just such a damn good area to buy SUI. And we did cover this. In fact, Raz and I covered this on a live show, that was just go time for SUI down here. Small consolidation, massive rip. They were there before and they've made loads of money. Yeah, then they probably sold up here and they're looking to buy back down here. What if they're not looking to do that? Then we look to this area to become one of mitigation, meaning you want to see a strong move below it, a retest of it, and then for price to move lower. So if we add those same principles to the chart we're seeing here, right, then what we're ultimately doing at the minute is just chasing down all this liquidity that's been built up in all these untapped highs. Just gives perfect opportunity for price to find fuel. So one now it was resistance, so this has now become support, right? So it's changed the colors on these recently. Yeah, resistance, now support. Great. What do we get here? Price closed above, didn't quite get above the level here, but did get above the box. We haven't had the pullback, but it doesn't matter because remember what I told you earlier, you don't need to see retests of these levels. You need to monitor the gaps as well. And we can see it came into this gap absolutely beautifully, held this level and is now pushing up. So if we're looking for pullbacks, we can see here, you know, we've got this gap down here now as well. Would have really liked to see a dip into this and then recovery above this level here, something like this. Yeah, and then that just being go time to step in. But the market's very strong at the moment. We're working off the back of a lot of news catalysts. So on a daily scale with SUI, we're above this level now. So when we're trending, I'm looking for one main thing. I'm ignoring the noise over here to the left because look at all this balanced price. No real gaps, just a cluster of highs that are waiting to be hunted down by traders, all right? Now, it doesn't mean just ape into this shit here. Just please don't do that. But just look and give yourself a plan. For me, I like to see these. Yeah, this represents an all block for me. This is a down close candle when price closes above. Yeah, then down close candle here. So what do I want to see here? Well, that's held now. So now I want to see this one. Right, so tomorrow I want to see price close above this, and then on lower time frames, I'm diving into there, waiting for these pullbacks. Yeah, liquidity to be swept, price closing above, and then we're away. All right, now to just take that onto a slightly granular level here, and I'm just going to get rid of these for a moment so it's clearer. We can see price kind of grinding above here. One of the things that I like to see at these levels typically is something like this. See where price kind of gets, and then you see this rapid expansion. Often leaves you the opportunity to wait for pullbacks with clear levels above, and you can see the people, people trap, come back down, people trap, no, okay, everyone flips bearish, market rips. Because a lot of people don't take the time to decant what's on the high time frame onto the lower time frame, right? They're too busy looking at these, getting worried about all the moves down. So let's just say, for example, you know, yeah, price is up here. So what are we doing? We're looking for these expansions, right? So what happens? We see an expansion here. We long the trade. Okay, so we get stopped out. Yeah, so okay, we've lost 1 R there. Maybe you get a little bit overexcited here and you see this tiny gap and you think, great, I'm going for this as well. What happens? You get stopped out. Okay, minus 1 R there. This is why risk management is so bloody important, right? Then what happens here? You see this expansion move in here, so no problem. So we long this, right? And then, you know, you just target that 3.3 R. All right, so you've lost 2 R here, but you're still up overall. Trading isn't really about winning. It's about understanding where price is going, getting involved in it, and also, you know, having the high time frame picture so that you don't do that, but then like an absolute tard, as you're coming into support, go, do you know what? I'm sick of this now because the market just keeps beating me up. So I think this is going to Hades. And what happens? You just lose again. Yeah. And then you kick yourself because you ultimately didn't end up catching the pump. And how many people have turned around to you, excuse me, and you've heard them say, oh, God, man, I knew price was heading for this level, but I just got stopped out by a wick, and then, you know, price ran without me. It's a terrible and horrible truth of the markets, but it's what hands money from less educated players to more educated players, and that's just the truth of it. So I'm not really interested in longing SUI here, I have to admit. I'd like to see a retest of this level, which is 4.1232, and I want to see how price reacts here. If not, I would actually much prefer price to do this, to kind of wick back down below this level and then see a big expansion, right, that would allow me to get involved. Ultimately, like I said to you before, we've been holding SUI for a lot lower. So that is kind of thoughts on SUI, really. I'm a little bit passive at the moment because we are coming into areas of resistance, so I just want to be careful, and that kind of brings me onto Bitcoin here quickly, which is exactly the same, right? We're seeing excuse me, we're seeing Bitcoin kind of come into an area. Look at all these upside wicks over here. Yeah, now I understand we're necessarily there yet, but we are pretty close, right? Even if we just draw a line across here attached to these bodies, yeah, we can see here this is what's capping the market. Why the bodies? Because it's just a line of best fit. Don't be afraid of, like, look, for me, I either snap it to a wick or to the base. If I snap it to the wick there, I can see that's the failure pattern I'm interested in. Price tries to swing above it, closes below, gives you an indication it wants liquidity lower. Again, quite simply, when you see the close below here, wait for price to come back, you know where you're wrong above this higher, so short it. You've got clear levels below. You don't get to that level entirely. I thought that we would, but you've ultimately taken profit on the way down. The key thing here is if you're wrong, yeah, and price doesn't do that, and you get stopped out, and price does close above here, then that's weakness becoming strength, and you can be pretty certain that price is now looking to do that. So often losing trades teaches you a lot about the market, and it can also really, really help your bias. Now, this for me doesn't have that much engagement. Yes, it's the swing failure that I'm really interested in, but looking at this high over here has a great deal of interest for me. Yes, it looks very unclean, but that was a really key high with a long upside wick and downside wick. When price returned here, deviation, price got beneath, and then this area acted as resistance. So how would I look at this? Because the other area I really like are the bodies. Because look how price was not able, yeah, let's get rid of that for a moment, no, leave that. Price wasn't able to close above this, wicks, big sell-off. So what can we do? Well, we can say to ourselves, to have a little bit more certainty here, you can draw this in like, and then this for me becomes a really, really key area. So I don't want to be longing into resistance here on Bitcoin. Does that mean I'm bearish? Absolutely not. If you think that, you're just, I don't know. I just don't really know how to help you. But it does mean that you want to show a little bit of caution, in my opinion, right? Because the graveyard of wrecked traders is full of headstones that said longed into resistance or shorted at support. Okay, so I've got the areas that I'm interested in adding, yeah, and happy to add with leverage here. I think we're in very, very good swing conditions as it sits, but I am looking for pullbacks and for price to go. At what stage would I not be looking for pullbacks? With a large expansion over here leaving us either a retest or a bullish gap in this move that we can get involved in. And again, if I'm wrong here and we close back below, then I'm really, really confident the price is moving lower. So I'll flip my intraday bias or short-term swing positions to short, with smaller allocation size, because we're ultimately bullish overall, targeting these lows. Something else, we've been speaking with a lot of members, right? And they've been finding huge in this. Yes, it is a product that comes with a membership to our private Discord. Make of that what you will. Members have been printing, everybody's been printing. We've got a completely transparent P&L with a trading team that posts all their calls live for members. The idea being you make money while we make money, but your focus should be on education so that you can fly the nest in X amount of time and do this stuff for yourself, right? But B-Pro, which is our in-house indicator made by the very own Crypto Bird himself, one of the biggest names in the industry for a reason, because he's one of the most successful traders within it. And he is a trend trader, all right? So he will be wrong 60 to 70% of the time, but manages risk very well, meaning that when he is right, his returns are much higher than his risk. So therefore, that's how the guy has reached the prominence that he has. And it isn't through clickbait on the internet. The guy is a multi-millionaire that came from absolutely nowhere because he learned how to trade properly. And this indicator has been built on that purpose. You can add lots of other functions to it, but for me, what I focus on here is the trend, yeah, and also urgencies. So I've got this set on the current one. This is on the daily, and you can see it's this candle here right? From the 22nd of April, that the system flipped and confirmed bullish. Yeah. We also come off the back of a divergence down here. You see the bullish divergence is starting to stack. So where do we really get interested in these? We get interested in these once they've swept liquidity. Bullish divergence sweeps liquidity, price cannot close below that. You know, with any significance, it tells us that there's probably a structural shift on the way. Now, when we're then trending, we look for these bearish divergences to show price's corrective moves, allowing us to get involved again. So what happened here? Price got the corrective move. We see the order block set here, means it's go time. We've now seen the corrective move here. What happened? Price created a gap. So now I'm looking for price to come back down towards this gap. Give us an opportunity to get long again, all right? But a really, really, really helpful indicator. All members get access to that. So if that's something of interest, or if you're somebody that's really struggling with the trends, you can obviously do this with moving averages and that as well, right? So not to just say to you, come along, make sure you get our indicator and stuff like that. But look, I really like it. I never shill anything at all on this show other than any services that I'm involved in personally, or ones that I really, really, really do believe in. And what we can see here is that you can achieve it with moving averages, but it's just a lot more noise, right? So you can do that. You can also go on our website, remember, and look at the cheat sheet for divergences, and then add something like an RSI on here. And what you typically see with an RSI is that as price here sets a lower low, yeah, what you'll often see is, you know, if you've got the eye down here, for example, yeah, then what you're looking here is price is setting a lower low here, price is set a higher low here. So what you've got is that's your divergence between the two. And it just gives you an indication that, you know, when the oscillators disagree with price action, that's when you can start to see some strength coming into the market. But ultimately, BPro does this, measures it all for you, and also does it off the back of another 10 different oscillators. So it gives you a really, really good average. Anyway, that's where we are with Bitcoin. We are up at resistance. We do need to show a little bit of caution here. All right, let's move back across onto our other list, and let's just take a look at Bitcoin dominance. We can see this really starting to drop now, and that's what you want to see when we're looking towards alt season. Obviously, when we see a drop in Bitcoin dominance, we see a rise in ETH. And just look how long this has been getting pummeled for. Yeah, and I mean like really pummeled, right? Because again, even if you're looking at this here, this is probably a key area, right? Yeah, it's messy. Yes, you've got deviations and whatnot, but ultimately you don't get any retests of this area followed by expansions. We obviously don't trade this chart, but this for me was just a really key area. However you draw it, all right, whether you're drawing it like that, whether you want to look at it as a line. Yeah, this for me, look, this is when this was a problem down here. We saw that sell off, then price kind of came back up, but look how price has just been getting obliterated, right? This was back in July 2024. Okay, so nice to see some resurgence from ETH there. We got the others chart as well, obviously the total charts too, which are looking pretty good, but we do want to be careful here. We can see total 3 coming up into resistance as well. Ultimately, the market does need time to just have a little bit of a breather. We can take a look at gold here, right? We can see when we flip bearish on gold. This is just from intraday. Obviously, gold overall is still ludicrously bullish at the moment, but gold is a really, really good safe haven for risk off, meaning that we look for gold to thrive in uncertain market conditions or risk-off conditions, okay? Whereas we look at things like the NASDAQ, yeah, to be positive when the conditions are thriving for risk, okay? So just to kind of finish up here on BTC. Playbook's really simple. Wait for the pullback, look to get gig along here. And when I say gig along, I mean make sure, yeah, that you just control your risk, because you can build, you know, wealth that will change your entire life. You can give it back in one trade, and it takes you a lot to make it. All right, so just be clever. Don't be one of those people that gets carried away, because you will become exit liquidity for someone, I can promise you. So simple expansion, close above here, give us a bullish gap, or hold and retest this level. We move higher. Until then, we're looking for kind of short-term corrective moves lower in order to get bullish. All right. And thank you, Ozzy. Yeah, look, I agree, mate. I really do. Especially, look, you can't. The problem that people have is they see crypto popping off and they want to get involved in it and they don't want to do the work or they don't have time to do the work and then they become reliant on other people. Yes, our members get signals to trade should they choose to copy them and they're incredibly profitable. If you don't believe me, come along and take a look. Every single trade is shared fully transparently along with all the statistics from the trades, entry, exits, management of the trades. And at the end of the month, all members are provided with an overview of how the month performed. I've led that team now for the best part of 2 years. It's been one of the best things and one of the best things that's happened to me in my career, because it's just been wonderful to get that exposure to these industry and work with some of the best traders in it. But if you don't have that knowledge, you don't have the time, as Ozzy's saying here, BPro can just, you just pay your membership dozens of times over every month with BPro. If you don't have that experience, and even if you do, like me, it can just be really, really helpful sometimes to just throw it on the charts and just go, look, bang, here we are. But I would always suggest as well, making sure that if you are taking signals, that you are off the back of that, backing that up with educating yourself to the absolute fullest extent that you can, okay? So Bitcoin's done and dusted with. Now let's take a look at ETH. Here we go. So ETH for me on a weekly is just a monster, right? Let's get rid of these bits. Right, look at this. Again, really key point of support here. Yeah, resistance. Right, support here. Price closes beneath here. Resistance, big sell-off. Resistance, resistance. Closes above, holds, beautiful pump. Holds, beautiful pump. Close below here, perfect retest, price sells off. Now we've seen a big expansion above it, thing of absolute beauty. Why am I again kind of suggesting just a little bit of caution here? Well, if we overlay the same principles, something we can see with this order block, the up close candles where price had an aggressive move lower, this is a really, really good area, right? So as we see this here, look, up close move, price really ripping down. So here I'm cautious. And again, playbook's really simple here on a weekly scale for me. We either expand above this, we flip it, mitigate it, and therefore this becomes support. And I think then there's nothing stopping this thing just tearing for all-time highs. Or while we hold below it, even if we hold and just chop around here for a bit, weekly gap here, I'd love to see, because I would love to just see a little pullback into here. People start to get overly bearish, and that's when you see those massive rips through the market. All right. Grandmaster Pikachu, you're an absolute legend. Thank you, brother. Really do appreciate it. That's a very kind thing to say. So as we sit here, let's just keep things really, really simple. So as we decant this down onto a daily scale now, you can see this consolidation, right? One of the key things in the market, I learned it very early on. Larry Williams was a key exponent of this as well, and a big part of his huge Robbins Cup success over the years. Trader SZ was probably the person that really hammered it into me the most, probably 4, 5, maybe longer ago in terms of years, when I had the pleasure of learning from him in terms of his FX work. Is looking for mitigation, right? So look for these consolidations, especially ones that lead to the market moving lower. In this case, because we're bullish. And what do I mean by those? Well, you should be able to spot the consolidations here, right? So sometimes it can look really choppy, so just focus on the obvious. You just want to, extended sideways action, right? Like we've got here. Yeah, what happens then? Price drops into here. You can see here is where we're looking at, right? Let me actually just draw this in properly. What do we get here? We're bearish here, right? So we get a rising wedge. Yeah, price sells off. Yeah, we then see price come down into this area here. We get another consolidation, price sells off again. Price then consolidates in here. So the expectation at this point is, remember, we're either looking for our gaps, in which case this was a bearish gap, until we close above it here. And remember what we covered earlier as well. And if you don't, you can always go back and take a look at the beginning of the stream. If we want to be bullish, if we see a bearish gap closed above, as we did here, it becomes an inversion gap, first sign that the market dynamics have changed. What else have we done? Well, we've stopped respecting, the down close. So here the up close candles are being respected. Up close candles close below, price sells off. Up close candle, price doesn't close below. Then all of a sudden, what do? We see this big, beautiful down close or bearish candle. You just do that in green, show it's now bullish because we closed above. We then create a bullish gap here, and look how price just can't force its way below this area. What does that mean? Well, it means every time people are trying to sell this off, it's getting absorbed, it's getting bought. Then we see the difference here. This range, then leads to a massive rip, all right? And look, if you didn't catch this, and I didn't catch these across a number of different assets, right? You're never going to catch everything. Plus, I am, by my very nature, an intraday trader. That's where I make my daily wage. That's what I live off of, right? In terms of swing trading, really difficult to find the time to cover everything. I have an amazing team that does that. I have people like Just Pit, who just not really sure I know many better traders in this market for what he's been achieving, right? Got traders like Resume, who, as Ozzy mentioned here as well, the indicators he creates are absolutely unfreaking believable. In fact, let me show you one of these, right? Because he does a brilliant liquidation levels one, which again is available for members. Position sizing, all about risk. He's got some other just ridiculously good ones, but I need to not do him a disservice here because I need to go on to the right ones, right? You need the major liquidity beasts like Binance or, BitMEX or something like that. But what I'm going to do here is I'm going to add in Resume's liquidation levels. Yeah. And I mean, look, you've got loads of these other ones as well. Like Apollo's a really, really cool indicator that he came up with. So let me just show you this here. And we're also going to add his OBV divergences. Now, don't try and do everything, for Christ's sake, all right? Just, use the ones that really make sense to you. So if you're not somebody that uses OBV, for example, then don't really worry about it. If you're somebody that needs a little bit of extra help, right? So let me just show you this for example, especially if we go on to say like a 4-hour chart. You can see where these liquidations are building up, right? So over here, for example, when people were all just calling for things to just be madly bullish, we're blah, 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 we're grinding up. Look at these lines down here. These lines represent key liquidity pools that have been set by price. These ones are all untapped. The liquidity here, as you look at that, there's none up here. None. People just aren't opening those levels. When they do, right, like here, what happens? Liquidity above here, look how it's swept, price sells off, really can't get above this level, continues to sweep, continues to sell off. Where does price get attracted to? Yeah, here, look. These are tagged. It's just a really good extra little bit of confluence for you that focuses on this. So what we can see here is actually the key liquidity at the moment is resting lower here on Ethereum, right? Because we can see as these lines project across, hopefully you guys can see this, right? Oh, no, don't want to look at most capitalized on the crypto screen just yet. Yeah, see, these are the stop losses of people that are longing this. They become really, really good liquidity targets, all right? So with something like that, if you're somebody that's struggling with trend and that, for example, right, let's have a look at this. This is brilliant. It reminds me of an amazing indicator. I do have to just give a quick plug to a group that I really don't work with anymore, not through choice, just they were a really big part of my, in my intro to crypto in about 2017. A guy, I think his name was Mr. Potato, this really cool kind of real guy that was really an early adopter to this. We used to use this color-coded candle system, and then this thing here, which when I traded, I think was called the M Market Liberator, I think. And these guys are the original ones. That's before, I think, BitBoy or whatever the hell his name is, he ripped these guys off, I believe. But anyway, politics aside, they're a really good group. And basically, look at this, right? And what you're saying here is quite simple. No, this is giving you your money flow index, right? This is the money coming in and out. You've got a nice RSI here showing you that things are still bearish here. And what you're looking for is like with this one with the MACD, these represent the bullish and bearish crosses, yeah? So as you look at it here, you see this green dot that comes in really low in the move. Look how much price is below the midline, the baseline here, which is 0. So look what happens. This gives you the early stage point at which you can get involved. So we're going to take a look at that in a minute. So let's just put an arrow on there. That's the early stage involvement. We'll look at this one as well, because we did get a green cross here. But then really what you want to see off the back of that, the RSI, the histogram, start to tick green, which is why this area, which we'll just put a little circle around, becomes a really key area to monitor. We see you get the structure break here as well from the MACD, where prices then start and gone from setting lower lows and lower highs to a market structure shift, and then it moves up into this nice thing, and then look at the upward momentum here on the histogram, right? So then as we look and we put this across here, look at where this got you involved. So here's the first green dot. but you didn't have any confirmation. What do I mean by that? Let me make that a bit bigger for you guys. What I mean by no confirmation here, and I'm just going to turn, I'll do it in a minute, it's fine. Here, yeah, we've got this. We didn't have the green histogram, so we know it's slightly lower probability, but we did have this dot here. But look, we didn't have, remember, like I said to you, we want to see a gap inversion here. We want to see a bullish order block set, right? Now, as we see here, for a bullish order block to be set after this green arrow, price would have needed to close above this, which it didn't do, okay? So we wanted to see price close above this, yeah, which it didn't do. So then price then sets a red arrow here. So we say, okay, we're now waiting. We're now bearish again. We want to see a sweep of some form of liquidity, which we got from here, right? And we got it. Just draw this one in so you can see it. There's the sweep of liquidity. And then when this green arrow prints here, guess what it does? It prints just before price overcomes this, setting a beautiful bullish order block. What else do we get here? We get the gap. Bullish gap, right? Price just closes below it by a smidge, but we're not interested at that point because we've had the structure shift to the upside. This is telling us we're looking to get bullish. The histogram ticks back up as well. This allowed us to position into longs from there. So basically, look, whatever different things speak to you in the market, if you think that looks really, really clear, then that's the kind of thing that you want to trade. For me, I really like to kind of make sure I'm focusing as well on price action, but ultimately, that's where we sit. Anyway, let's take a look at our ETH chart that we've been covering over here. Right, there we go. Pop that off for a minute. So, again, all of this TA is just purely from all of the live shows, right? So we don't change this. Let's just pop this back to a daily. These were the areas we were targeting when we started to break down above. Again, look, very, very simply, weekly order blocks here. So let me pop you out to the weekly chart. When we lost this area here, we were looking for price to come down to here. If we lost this, we were looking for the original consolidation that led to this rip. That's where we were buying. And I wish Raz was on the stream for us because him and I were waiting for this level for effing ages, right? For this level to be swept out. And thankfully, it's starting to really tear. So now moving on to a daily, look. We've got our key level. I know there's a lot there. I really can't be bothered. It would just take a lot of cleaning up because I just really haven't been that great in terms of keeping these in sections recently like I did over here, because it's just been obviously super exciting to be back on the bullish side of this market and for the news to finally catalyze itself into a really positive format. So this here, yeah, we held this area. Here's the structure break. This gap here is the displacement, and look at the big bodied candle. We then inverted this gap here as well with this candle, looked for this area to hold as support. This was the arrow we were looking for price to just pull back into here. We got the perfect retest of that, and we've been long on ETH since. So where does that leave us now? Well, again, for me, I'd really like to see this kind of move a little bit higher. If we just pop back to the weekly here as well, we haven't had a retest of this, which is why we were looking at that to offer resistance. And we can see that it's offered it. I believe it's tagged it pretty much to the... well, it's just a smidge short of it, right? But I think this is going to be a key area. So on a daily scale, I either want to see price closing above this. In doing so, closing above this down close candle, setting it as an order block. Or I would be really happy to see price kind of pull back towards this red line around 2,127. For that to happen, I do think we need to see the equity markets cooperate as well, because as that's just tearing faces off, I think that's going to be a little bit tricky. For more aggressive plays here on ETH, then we've got this level, right? We've had a nice expansion. See the little bit of gapping in here. See how price continues to support these order blocks. So what I really is kind of hold. Well, I'll leave that in green just to show that it's a bullish order block. Down close candle after a liquidity sweep is especially interesting. Price is now closed above this. Long wick to the upside. Why? Profit taking. We also took out this, so we've seen a swing failure here. What we really want to see is just this level hold for any intraday plays to push up. Ultimately, personally, I would prefer to see a corrective move lower, but the market doesn't give, two hoots about what I want. So I need to be prepared to trade this if we run aggressively, prepared to trade it if we go deeper. How am I going to trade this if I want to trade it aggressively? Yeah, is really simple. We can see price starting here on the 15-minute to grind trend. Right, we covered this earlier. You can go and see the Twitter posts as well. You can see these consolidations, price struggling to get above here. So just wanted to see this area hold. Ultimately, early hours here during the London session, this was a decent intraday scalp that then broke down, right? Again, we are very high in this move. So while price continues to break down here, all we want to see is some form of key liquidity taken. If you're an intraday trader, obviously these same things apply to higher time frames. So if we see this level here, for example, recovered, nice expansion, some form of bullish gap in here, then you bet that I would be taking longs up into that. However, what I really want to see is price kind of move a little bit lower so that we get some form of higher time frame corrective move. Yeah, ultimately price has had a really, really big expansion here. So to maybe coming back to kind of retest these areas. I know we've kind of retested this here. I think we did just get a little bit of a, no, we didn't. So that's even better then. That's a real level that I'll be watching here. All right. So let's pop a little alert on there. Really do yourself a favor when there's levels, areas you want to look at. You're never going to be able to monitor everything all at once. So make sure that you're setting your alerts. So let's see this area hold here. If we want some intraday plays higher, we'd say doji candles here looking like the indecision, a kind of larger doji candle here with, a slightly telling longer upside wick here than downside wicks. Kind of has me feeling like a corrective move lower could be on the cards here. If we kind of zoom out, we look at the equity markets, which are incredibly strong. The VIX, which is continuing to drop off, does really paint the picture, well here for risk assets, but maybe that's drawing the liquidity away from there. Obviously, the key thing here, looking at altcoins, is that Bitcoin is correcting, as we discussed earlier, from this resistance. So you need to balance out the fact of rotation of capital into the riskier assets, which are the altcoins, versus what Bitcoin is doing. But, overall, Bitcoin's the big mama in this. So that's what we want to be paying attention to, because if Bitcoin wants to really drop here, then your alts are fucked, believe me. All right, not all of them, some narratives will hold up, etc., but most of them will just absolutely die, and you want to be on the right side of most. Okay, so if I'm looking at that here and I'm saying, look, we've got kind of a rising wedge pattern here, and I want to do this with some consistency, so I'm going to anchor this onto some proper wick here. I actually think that's quite a nice rising. I'm sure someone like Axel Kayaba would put me in my place with that, or maybe Mr. Million, who I had the pleasure of speaking alongside at OKEX, is wonderful event in Dubai, who, is just an absolute giga chad at these competitions and is just looking, in bullish markets to trade these wedge breakouts and stuff, just really showing you that the price action doesn't, or trading doesn't have to be as difficult as you want to make it. But something like this, that's a terrible wedge really, but what you can see here is a clear downward trending market with a nice big breakout retest, and then the market pumps. Now we're looking at a rising wedge, which I believe gives you a 65 to 68% chance of price breaking down from here. But this isn't a problem, because this is a 4-hour. We're basing this on higher time frames where this holds very little relevance, because ultimately we're looking for this to come back down here so we can become bullish, or we're looking for it to get above here so we can become bullish as well. Just going to finish up for the last couple of minutes. I want to take a look at deep. Let's have a look. I don't think we've covered this one before on here. No, I don't think we have. So let's take a look. Take a look at the spot contract on buy a bit. So deep, what have we got going on with deep? I think it was Grandmaster Pikachu that said that he's interested in this. So let's take a little look. Deep looks good here on the weekly, because we've got this bullish gap holding. Had that nice expansion, remember, so that's what we're looking for. Little microstructure shift here, now respecting the down close candle. So on a weekly scale, while we hold that, let's get price above this level here. All right, and then I think, sky is the limit for that one. On a daily scale, again, we've seen that we've left this nice gap here. And again, running the same core principles here, we can see a nice bullish order, but neither of these have been tested here. So maybe while price is struggling to get above here, we see a pullback to these levels. Any expansion here, in my opinion, is offering good buying opportunities. Starting to see a decent move up here today. When did this start? Last night through the Asia session. If this is going to hold and push up, then there's a gap here around about 0.20639 at the highs to hold. Yeah, because again, at the moment, if we're going to hold this level, we can see that this is holding a nice uptrend here on the 4 hour. So that's what I'd be looking at. Obviously, I would be looking at fundamental drivers as well. I hate it here. Hello, mate. Sorry, I didn't see you sneak in there. We covered ETH, SUI as well. And there was this other quite weird, no offense, but MRCH. Come on, let's say MRC. MRC, let's have a look. One of these Uniswap beasties. Yeah, okay. I did wonder if that was a bit shilly. Yeah, when someone recognise stuff like this, look what they're doing to you. This fucker just launched this morning and it's just dumped on everyone. So probably just some twat influencer or someone that's just shit on all their followers. So, you know, if you find idiots like that in the space, then just, you know, just learn from it and just stay the hell away from them. The space is absolutely littered with them. So, looking at Audi here again, because I know we did cover this early, looking good. I think, you know, it suits the hot narratives at the moment. Key area of resistance here, because it was a key area of support here. Get back above this, and I think we tear. And then STX as well, which is coming into this really lovely clean area that we can see. Get above here, I think we really rip. If not, any pullbacks to these gaps or this order block or this consolidation here, for me, are going to be adding to the position and possibly looking to take out some leverage as well. All right, legends. Well, that's going to wrap us up for today. Thank you so much. 3,500 of you live, and you know we normally get quite a few more than that will watch this on recording as well. So do appreciate every single one of you. Remember, we're back live again at 1100 UTC on Wednesday for our alt request show, where we're going to dive back into these charts. So please, if you have anything you want me to take a look at, just ping it in the chat on the show and we will take a look, or reach out beforehand, but then give me a reminder and we will absolutely rock from there. A huge thank you to all of you. Have a fantastic day. Trade safe. Keep a little eye on the news. Remember, we've got CPI tomorrow. We're rolling in later in the week as well, this week on Thursday, into PPI. This is focused on the US markets. We also have unemployment claims, and we also have Fed Chair Powell speaking. This is all about the tone. We know rates are flat. We know risk markets are pumping. They might be a little bit concerned about that kind of plugging in to a little bit more inflation and the risk of that rising. So any kind of, you know, hawkish, which means bearish tone from him, could be what cools the equity markets off. But at the moment, we're in such a fundamentally a news-driven environment. You know, also we want to make sure we're keeping an eye on what Trump says and how these tariffs and everything are playing out. You know, and absolutely everyone and God and or whatever God you celebrate, whatever religion you have, or whether you believe in the universe and stardust, holding us all accountable for our actions, then just let's all get together in our hope that peace can be reached between Russia and Ukraine, and that there's no escalations between India and Pakistan, and that everyone can prosper from a better world together. Have a fantastic week ahead, guys. I'll see you legends over at the Nest. We've got live trading picking back up tomorrow as well, so let's go and make that bread. And for the rest of you, I'll see you on Wednesday.